welcome. Happy Friday. Yes, we survived another week. How you doing? I'm Joe Jaquin, CEO of the Patriot Trading Group. Our toll-free number, 800-951-0592. The website at allamericangold.com. And what a crazy time we live in. Isn't it just incredible? Beautiful day again here in the Valley of the Sun. I did watch a little bit of the Barrett Jackson. Wow, how times changed. The vehicles now, I guess that's just how it is, right? The older stuff kind of losing value, and now I saw a lot of trucks and K5 Blazers and stuff like that out there, getting I don't know about ridiculous amounts of money, but 50, 60, 70,000. What I would think was ridiculous, but nonetheless, I hope you're enjoying all the auctions here in the Valley of the Sun. We got a lot of ground to cover. Is the government going to shut down? I don't mean to laugh. It's not funny. Again, our elected officials are. I don't know what I can't. It's a family show. I don't want to use bad words, but. They're all idiots. Let's just go with that one, and we'll talk about it. So they've got till midnight tonight to get something done or face a government shutdown. The House has passed a 2-week extension. They've been doing this extension. The House passed an extension. Apparently, the Senate doesn't want to do that, so we'll have to wait and see and all of that hoopla. I don't think it better not happen, but it could. We'll have to see how that plays out. We have news out of General Electric, news out of Goldman Sachs, news out of Albertsons and Safeway that we need to talk about. We have all kinds of analysts now raising their gold and silver forecast. We'll talk a little bit about that. The dollar, again, under pressure. The 10-year note, the highest level in years today. Last time I looked in, it was 264 and change. And I don't know what the number is that is going to start hurting growth. But the problem with rates rising is all the debt instruments cost more when that happens. So your mortgage costs more, your credit card debt costs more, your auto loan costs more. Anything that's tied to the debt markets is going to go up in price as the rates are rising, and we're kind of in this interesting dynamic where we've got higher rates and a falling dollar, and it's one of those catch-22s, right, where we've got so much debt that rates are rising, which is causing the interest payments on the national debt to spike, which is causing to have pressure on the dollar because now the deficits are going to be even higher, and you just run through this vicious circle. How it's all going to play out, nobody really knows. I shouldn't say nobody knows. I think everybody knows. That's kind of really the funniest thing about it. When you really, really think about it. How is this all going to play out? And most people, when you look at how things are going to play out, what do you go, well, how did it work for this country or that country? Or how did it work for this currency? Or how did it work for that currency? They always work the same. They go to nothing. And I think now Gerald Celente talked about that's it. We're going to go to some form of blockchain-type currency events. Hearing more and more central banks talking about it. We played the clip the other day from Robert Kiyosaki about how, hey, in 2040 there's going to be. Right now he says there's three currencies. Right? There's God's money, gold and silver. There's government money, and it really doesn't matter. Name the currency, whether it's the Federal Reserve note, a euro, a yen, a won. It doesn't matter. Government money, right? And then there's what he called blockchain money, and he said by 2040 there's only going to be two of those three here. and the one that's not going to be here is government money. And I think and it's kind of really a simpler way of saying what I've been trying to say all along, which is we're going to enter into this digital currency thing. I think inflation and hyperinflation is going to be the root of it. This will be the cure for it. This is how they're going to sell it to the masses. And I don't think it's going to be a Bitcoin or any of the ones that are. That's just my opinion because I don't know. But I believe that the central banks are going to have their own, right? Every major economy in the world is going to have their own form of digital currency and be able to, I guess, devalue as quickly as they need to. And you think about all of the things that we've been hearing about, the huge turn in the tone of the central bankers, even just right here at home. Now they're all talking about forget about 2% inflation. The only number we've heard so far is 4%. And it just starts from there and gets worse. And I think the reason for that, I think they already know. Right, they already know what's really coming out there as far as all the pricing goes. Consumer confidence came out today, and now with the tax cuts passed, you'd think it was going to be skyrocketed. It actually went the other way. People starting to focus in on how much things are going to cost, and ultimately, at the end of the day, who's going to be left holding the bag? And the answer is really simple. If you don't have any of God's money, you're going to be holding the bag. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Gold's up 7. Now get used to it. I keep telling you, 13.34. Silver's up 6, just at $17 this morning. Again, I'll say it again. Silver's like 78.5 ounces to gold. That gold to silver ratio, you need 78.5 ounces of silver, and that's really at the high end. Anything you do here at Patriot right now, I tell you, mix in some silver with it because it's just really attractive at that level. We had a bunch of upgrades. All of a sudden, all these experts recalibrating their forecast price for gold and silver. PAMP being the latest, they came out this morning and said they've raised their gold target to $1,440, and I'm going to tell you that's low. Of course, but they're always low. All of those guys. $1,440 an ounce on gold, silver $20.20 on silver, and again, both of those. And of course, I told you that last month. Listen, we're going to see. Somewhere, and I've actually been up in even, and I yell at these experts. It's very 1450. I think is kind of baked in for gold. Could be 1550 if somehow things don't work. This tax cut, we don't get the growth, and the economy starts to falter. Then you can be seeing something higher than that, but I'm not there yet. So I'm thinking 1550 is definitely possible. Silver over $20, I think, is a given as well. But there is a really interesting thing happening with our central bank, and you noticed all of them are talking about elevated levels that they need to get the inflation target number. We need to get to something higher, and one of the reasons now starting to come out. So you only get bits and pieces. You don't get everything all at once. So here's what they know that they didn't tell us a couple of weeks ago. U.S. consumer credit. Okay, so that's the how is the average U.S. citizen doing with its debt? The Federal Reserve said that the Americans' outstanding debt has hit a record level in November. U.S. credit card outstanding debt also surged to a new record, taking out the old 2008 highs, had the largest jump in 16 years. And so what that tells you is more and more people are, hey, I've run out of check, but I've still got bills, and I'm busting out the plastic. The previous record, and this is just for credit cards. So we already know we've got record debt in autos. We've got record debt in student loan. And one of the things that we learned this week, too, is what's going to happen to the student loan market just in the next 6 years. Right? The Fed is projecting it to double. And then we're already at $1.5 trillion, and now they're forecasting a number north of $3 trillion. And today we find out that the U.S. credit card debt has now taken out the old all-time highs of April in 2008. The acceleration in the debt shows Americans' credit card debt balances mounting. Obviously, we had the holiday season and all of those things. The increase in what they call non-revolving credit outstanding. Okay, that is the motor vehicle piece. So now you think about what we just talked about. We just talked about student loan debt, record, non-revolving credit, right? Auto loans, record, credit card debt just eclipsed the record, right? And now household wealth, unfortunately, not rising to match it. The risk to the economy is that consumers with fewer assets, right? Fewer assets may have to temper their spending until debt loads become more manageable. In other words, hey, we may be faced at a place where consumers, they're out of money. The raise that we're all allegedly getting on the tax cuts may only go towards servicing the debt that they already have. Even if you personally think you currently have a good handle on your credit card debt, all it takes is one emergency to go from feeling your debt is manageable to being in over your head, right? We talked about this, right? No one really has a lot of excess money out there. The fact is, credit card debt is never truly manageable. If you are paying interest on your outstanding balance, you already have a financial problem on your hands. The average monthly balance for borrowers who cannot pay their balance in full now is $9,600, and you pay $12,054 in interest is paid each and every year, and now rates are going up. So this was, I guess that was part one. Then this was out from CNBC today, talking about fewer homes going to be sold in 2018, and that they're talking about mortgage rates, which sat near record lows for the bulk of 2017. And this is something, right, when you think about it. We already had falling home sales. Even though the rates were at record lows, the average 30-year fixed has now risen to 4.25%, according to Mortgage News Daily. That's the highest level I've seen in a long time. The expectation that interest rates are going to continue to move higher and that mortgage rates are going to continue to rise have a dramatic effect on homes, not just on prices, but on people actually being able to purchase new homes or any home. So, you've got all of these things going in that you've got to figure into what is really happening. Where are we fiscally? Where are we financially? We talked today about the government possibly shutting down because no one can agree on how much debt we really want to go into. And now we look at every facet. Now, this is the first time since '08 where all four asset classes of debt, and I'm talking now just for the consumer. You have housing, right? Mortgage debt. Now student loan debt's number 2. Auto loan debt's number 3, and credit card debt's number 4. Those are the 4 pillars of debt. All of them now at record highs, and here's the part that makes it even worse, is the balances, right, that each of the individual owes are at levels we haven't seen, and now the rates are rising. So now everybody's going to be paying more, and it doesn't matter whether it's the credit card, the auto loan, the student loan, the mortgage, right? All 4 asset classes all get hit at the same time, and you really start to, and you just start putting it together. Right? You start all of a sudden, the Chinese are now stepping to the forefront, getting their currency out in the world because they want to sell their debt to everybody. You've got all of the, and I shouldn't say all of our central bankers, but let's just say a growing number of our own central bankers talking about the need for it to go even higher. Right, talking about inflation and price setting and price targeting because they need to get growth to service this stuff. If they don't get it, I guess we're going to see a huge jump in defaults. That would be my guess. So either we're going to start making some more money or a bunch of people are going to start defaulting. Speaking of default, Albertsons Safeway joining the list now of companies that may be in trouble. They've got over 2,000 stores. I don't know who really shops at Albertsons. I don't know. There's a bunch of them here. They're not. I don't really go into one. My wife goes into Safeway, even though she knows they're expensive, but she'll go in there because she doesn't like to wait in line. That's always a bad omen, isn't it? Why do you shop there? Well, because I don't like to wait in line. It was just like there's the Sam's Clubs that are shutting down, right? I have a buddy of mine, who uses Sam's Club, at least what I amongst my friends, were a lot of small business guys. I have a buddy of mine. He runs a catering business, and he said, "Yeah, I went in there because they had the plates and the silverware that I liked, and this and that. They had a few niche things. We were actually a member because there was one thing there that my wife liked." I don't even remember what it was, but they said the same thing. Well, what else was nice is because I'd go in there, no one would be in there. So if you like shopping at one of these places that nobody's in, get ready because they're going to start Cerberus Capital. You remember those guys, the Jon Snow, former Treasury Secretary, who's over there. They're the owner of them. Albertsons, Safeway, increasing levels of debt, sales that are declining. Then we had news out of General Electric, GE. They're the last original Dow component left. And not only does GE have the largest pension deficit of all S&P 500 companies, the deficit is $11 billion worse than the next closest company. According to Dow Jones, GE now has an unfunded pension liability of $31 billion, and that figure is only from the end of 2016. Fresher numbers have yet to be released. GE's pension nightmare the result of years of inattention. I love listen, I don't know how you can be a publicly traded company. They all do it, right? They're allowed to pretend like they don't have these issues. Years of inattention and historically low interest rates that have driven up pension liabilities around the world. This is not just a math problem. More than 600,000 current and former, and I imagine the former making up the largest piece of that number, former GE employees are relying on these benefits. The pension shortfall, more evidence of GE's financial troubles, and I don't know if you saw that they had to take a $6 billion loss earlier this week. It may have been last week. Forced the iconic company to slash its dividend last year, right? Think about this. This is how, when you look at Wall Street and all of these record highs, and I talk about it once in a while, they allow these companies to use these adjusted numbers that give you a reality that just really isn't true. We'll talk about GE when we return. Patriot Radio News Hour. We'll be right back.
This is the Phyllis Schlafly Report, a daily commentary continuing the pro-family legacy of Phyllis Schlafly. Now from the Phyllis Schlafly Center studios, here's Ryan Haidt.
Phyllis Schlafly postulated in 2003 that the culture war would be won by leftist activist judges unless conservatives took a stand against judicial supremacy. Sure enough, the last few years have brought to us an unprecedented assault on the family by unelected lawyers. Unfortunately, conservatives who ignored Phyllis still don't know how to repel the black-robed assailants. The December 2003 Phyllis Schlafly report tells us what we can do to reclaim the American family from judicial supremacists. When the 2016 Obergefell decision legislated national gay marriage from the bench, most conservatives were paralyzed. Many even capitulated to the false notion that a Supreme Court ruling is the, quote, law of the land. Of course, any civics student in elementary school can tell you that only the legislative branch has the power to make laws. Nevertheless, liberals and conservatives have allowed the judicial branch to usurp unlimited power in clear violation of the U.S. Constitution. Of course, rulings like the Obergefell decision don't always pop up out of nowhere. Gay activists have been trying to use the courts to impose their will on the nation because the American people would not allow the legislature to adopt such an agenda. The question then becomes, what can we do now to turn the tide? Phyllis Schlafly's book, The Supremacists, listed 10 different ways to curb the power of judicial supremacists. It is more important than ever to take the necessary steps to get the right judges onto the bench to begin with. However, when judicial supremacy does creep in, conservatives need to be willing to do things like legislating exceptions to court jurisdiction, limiting federal courts under Article 1, Section 8, compelling Congress to employ the power of the purse, and even pursuing impeachment against radical judges who overstep their authority. People shouldn't be bamboozled into thinking that there's no recourse after a judicial opinion is given. Being ruled by a system of unelected oligarchs is incompatible with our constitutional form of government. When the American people realize the power that they truly hold, judicial supremacy and its culture-changing impact will have no chance.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Can activist judges be stopped, or will they continue to overturn laws with no regard for the Constitution or the will of the people? Connect with us at phyllisschlafly.com to hear alerts on rulings made by never-elected supremacist judges and to share your viewpoint. That's phyllisschlafly.com. Thanks for listening, and join us again for the Phyllis Schlafly Report.
Welcome back. Patriot Radio News Hour, 800-951-0592. We're talking about General Electric and their $31 billion unfunded pension liability and growing. They're saying now the iconic company is getting ready to. I think they're trying to sell themselves. I just don't know that anybody's going to want to buy it. Their balance sheet is a mess. They don't generate a lot of cash, and they have a severely underfunded pension problem. And I just listen. You just start adding all of it up, and remember. And I know it's easy to get caught up in the cheerleading and all of that stuff. And we talked yesterday about how Trump's trying to cheerlead his way and cheerlead us into some economic nirvana, and somehow we're going to grow our way out of it. It's not possible, right? That is a math problem. It's like General Electric's problem. General Electric has a problem, right? Their balance sheet is a mess. They don't generate enough cash, and they have all of these unfunded liabilities. Think about our government. Let's see, our balance sheet is a mess. I mean, we're threatening a closure of the government right now. Right? And again, I don't know I hope they don't do it. That's just bad governing, but neither here nor there. Right? Our balance sheet is a mess. Right? We don't have enough cash. Right? We're spending way more than what we're bringing in. And we have all of these unfunded pension liabilities, right? And we talk about Social Security and Medicare and all of these other programs. And then you look at the actual state of the U.S. consumer, and they've got the same problem. And you start to think about, how is this really going to work? Why do you think it is that gold's all of a sudden running again? Gold's up, we're $16 away. Gold's $13.34. We're $16 away from gold being up $300, almost 30% in the last 25 months. Why do you think that is? And you think about, we've been raising rates for the last 25 months. That's not how it's supposed to work, right? If you're raising rates, right, gold's supposed to fall, right? That's how it's supposed to work, right? If we're raising rates, the dollar's supposed to rise, right? The dollar, you raise the rates, the dollar rises, gold falls. That's been the old playbook. Now we're in a whole new playbook, aren't we? Right? We're in a playbook where we've lived off of debt for 40, almost 50 years. And now the debt's starting to choke us. And you can see it now, because now we've got rising rates. Right, the 264. Let me just check the bond market here. Yeah, 2.637 right now. So 2.64 on a 10-year note. We have all of the dollar continuing to fall. Matter of fact, the dollar's hit its lowest levels in years. Right, getting ready to go back below 90. And now you have gold running. You've had the largest purchasing by central banks in gold that we've seen in a number of years, at least, 5 or 6 years. Remember, we talked about that yesterday, over 400 metric tons. And you start to really see, you're seeing the beginning of this cycle, and this cycle goes for at least the next decade. And actually, I don't even know how it stops, really. And now we're in this terrible situation now where now our own central bankers are talking about, hey, we need to get this price asset targeting tool to start working better, and we need to go to 4%. Do you know what that means for you? Do you know what that means for the consumer? Right? Do you know what that does to housing prices? Do you know what that does to car prices? Do you know what it does to student loan debt? Do you know what it does to credit card debt? Right? At the same time, do you know what it does to the federal government's debt? What it does to the debts of the states and the cities? And it's that horrible double-edged sword that we now live in, right? And I got a funny feeling that it's going to work out in the form of, and I don't want to say default because the government owns the printing press, but it's going to end up in a form of inflation. You know, people will call it hyperinflation. I'm telling you, it's going to be more like stagflation, right? Where we really aren't making a whole lot more money. And yet everything's getting more expensive, and everything not the way you would typically think. Like we think about gas prices and food prices. It's going to be the servicing of the debts that you've already accumulated that are really going to start skyrocketing. Right? That minimum monthly payment on the credit card. All of a sudden it's going to go up. You know, gradually at first, $30, $40, $50, $100. Next thing you know, you're paying an extra $200 a month just on the interest side of it, right? And how many people are just making the interest-only payments? Now you go to buy a car, and it doesn't matter, new or used, it doesn't matter. The amount of your monthly payment is going to go more. So, you know, $30,000 car. Okay, that's kind of what, not even the average, that's below the average price of a new vehicle. Right? $30,000 car, all of a sudden now, it costs $15 a month more. And now they're talking about, hey, we want to be at 4%. Right now, instead of it costing $15 a month more, it's costing $100 a month more. Still only $30,000 that you're borrowing. And that's a month, right? And you start to really get into this situation where all of a sudden now you have this horrible situation where you're already maxed at your debt levels and the payments are going up. You haven't added any more debt. And you're running out of money at the end of the month, and this is kind of the scenario. This is just what stagflation would be. Hyperinflation, at least your pay would be rising, so hopefully you can offset some of that cost. I don't think it's going to rise nearly fast enough. Patriot Radio News Hour. We'll be back right after the break. Got another great special today. This one is one of my favorites right now. We got a great opportunity this time on the $10 Liberty Gold pieces. So you're going to get two $10 Liberty Gold pieces and one Silver Eagle. Not a roll, just a Silver Eagle. You're going to get all three pieces for $1,380. So you think about that's you know, the Silver Eagle by itself is $20. And then you take the two gold pieces, that's like buying a $10 Liberty down at $680, $1,360. You know, and you got spot gold at $1,334. It's just incredible. So two $10 Liberties, and those are the older ones, 1866 to 1907. Get two of them, plus a Silver Eagle for $1,380. And you think about all the people now, they're all finding religion now and saying, oh, gold's going to be $1,440, $1,450, $1,550. Some are even saying it could be $1,700 before the end of the year. And you're going to be buying two $10 pieces and a Silver Eagle, all for $1,380. Yeah, that's a big buying opportunity. 800-951-0592. If you buy 20 packages, so the package is $1,380. If you buy 20 of them, it's going to be free shipping, so that'll get you a whole roll of silver, 40 $10 gold pieces. It would be $27,600 if you buy 20 of the packages. and we'll throw in the shipping there, 2 $10 Liberty gold pieces and a Silver Eagle for $1,380. I don't like using the free word, but it's kind of like, you're paying $1,380 for the 2 $10 pieces and getting a free ounce of silver. Right? I mean, or however you want to look at it. But either way, you're talking about buying gold that close to the spot. And really, that's always great. But isn't it even better when you're buying it that close to spot and everybody's now saying, hey, by the way, spot gold's gonna keep on climbing, and we're just marching our way back. Right? We're marching our way back to the $1,900 level. We're going to be seeing new highs in gold. I don't know if it may be before 2020, the way things are looking right now, and you're starting to see all of these little cracks in all of the things that the Federal Reserve did. How did we get these debt levels this high? You got to remember how it all started, right? The Fed left rates down at zero for 9 years. Right? Up until 9 years ago, well, now 10 years ago, right, anything below like 3 or 4% was pure nonsense. Right? They tried to blame Alan Greenspan. They tried to blame the housing bubble because Greenspan brought interest rates to 1% for less than a year. We had them at 0 for 9 years. And now rates are rising, and they're going to continue to rise. And now the fact of the matter is the servicing of the debt becomes a huge problem. Every one of these people that are forecasting higher gold prices now all say the same thing. Well, rising rates should give the dollar some strength. However, rising rates is going to add stress to the debt levels, therefore will create dollar weakness. And now they're starting to see it the way I've been telling you it's going to happen. The weakness is going to be a lot bigger than the strength, and that's why you're seeing gold act the way it is. Right now, gold's up 7 at 13.34. The dollar's down again, or the dollar. The dollar is down again, but the Dow is down back below 26,000, and you've got this mix of people out there. Some of the people that I pay attention to, anything above a 10-year note above 263 is bad for stocks. Some people think it can get to, a whole 3% before it gets bad for stocks. I don't know which. But we're going to find out, because I think the 10-year note is heading a whole lot higher, and a lot of people are not prepared for it. And that's the part that, the unintended consequences. Nobody wants to talk about that. Right? Nobody wants to talk about all the damage that they did while they were pretending that they were fixing things. Let's not forget all of the things that they did to quote-unquote fix things were things that they said that they should never do. But again, when you have a private entity that no one oversees, no one gets to audit, no one holds them accountable, they get to act any way they want, this is what happens. And I promise you, history is going to judge it like they did all the other fiat currencies and all the other central banks that came before it with failure. And that's where God's money comes in. Gold and silver, U.S. $10 Liberties. You're going to get 2 $10 Liberties and a Silver Eagle, all for $1,380 at 800-951-0592. If you buy 20 or more of the packages, we will throw in the shipping for you as well. I guess, by the way, the White House is going to hold a press conference about the shutdown. We'll see what comes out of that. Patriot Radio News Hour, final segment on a Friday. Don't let the weekend get by without adding to your portfolio. Well, one more bubble getting ready to pop. Commercial real estate. Highly leveraged, $4.3 trillion backed in loans, suffered its first loss since 2009. So commercial real estate prices falling for the first time since 2009, saying banks are less able to withstand shocks to collateral value. Boston Federal Reserve President Eric Rosengren. So you see, we only get this stuff a little bit at a time, right? So now here comes the Boston Federal Reserve President, who we haven't heard, is now fretting about commercial real estate prices and more specifically the $4.3 trillion in loans that are behind them. And Rosengren says a lot of them are issued by smaller banks, so not the Big 12. The significant decline in collateral values. They're known as CRE, another one I've never heard of them, but yet here it is one of the root causes of a financial crisis. The CPPI is based on estimates of private market values of REIT portfolios across 5 major property sectors, saying that, retail sector dropped 11%, self-storage sector down 2%, lodging sector down 10%. The apartment sector is the only one that was up. All the other ones suffering hemorrhages. Listen, it's a debt problem. You can't fix a debt problem with more debt, and that's what they did. They leveraged up everything. Don't you understand it? Everything. And now the cost of servicing that debt is starting to spike. And it's going to start causing it's going to cause problems, and lots of them. U.S. $10 Liberty, you're going to get 2 $10 Liberties and a Silver Eagle, all for $1,380 at 800-951-0592. If you buy 20 of them, we'll throw in the shipping. 20 packages is $27,600. Gold's up $7.50 now, $13.3450. Silver is higher as well. Silver right at $17 to the ounce. And the Wall Street is now down 50 points, right near the lows for the day. Worries about a possible government shutdown, and I don't really think they're too worried about that. But it's the rise in the 10-year note. Matter of fact, now Dow's down over 70 points. So the rise in the 10-year note, listen, this is the problem, right? Why does Wall Street not like it? Because the servicing of all the debt that all of these companies have amassed is now going to get more expensive. And then, of course, right, the other side. I'm not going to borrow any money. I'm not going to do any. It's too expensive now to borrow it. I'm going to wait. Patriot Radio News Hour. 2 $10 Libs and a Silver Eagle, $13.80, 800-951-0592. Listen, enjoy the weekend out there. Let's hope there's not a government shutdown on Monday. We'll talk to you then.